Yo, what's going on, guys? Welcome back to day 19 of the mentorship. If you haven't watched the previous videos from day 1 all the way to 18, I highly recommend going and watching those before you get started on day 19, because why else would you just watch day 19 to the end? So make sure to go back to day 1, watch it if you haven't already. If you're here on day 19, I applaud you for your consistency in watching these videos. And yeah, so basically what we're going to be going over today are rejection blocks. What are they? How to use them? Frame trades, all that good stuff. All right, let's go to get started here. So rejection blocks are price zones where the market decisively rejects a level, whether that would be bullish or bearish, okay? And leaving behind a wick that shows a sharp reversal. These zones often indicate where institutional players enter the market, and they signal areas of strong supply and demand. Hence, if you look at a chart example and sell side gets taken out, there's demand at that sell side, because more than likely it's at a discount and it wants to get bought back up. And conversely, if there is a buy side level, price wants to sweep that, which is the supply, right? Something's expensive, you want to sell it, right? And then that goes towards the downside after taking buy stops. So for a bullish rejection block, you're going to see a wick formed after a long wick to the downside. So for a bullish rejection block, it's going to be formed after a long wick to the downside followed by a bullish close. And then of course vice versa for a bearish example. So the way these rejection blocks actually work is they often form after price takes out liquidity, such as stop hunts above highs or lows, also institutional activity as well. The rejection signifies heavy buying or selling pressure, showing where smart money held a certain level. And a rejection block signals a shift in momentum, basically saying, hey, price has already reached this key level, we're ready to go to the other end of the range, take out buy side, take out sell side, whatever you're trading, whatever direction it is. It also makes it a valuable tool for identifying reversals or continuations, especially if you pair it with an SMT. So if we head over to the chart right here, I made some visual examples for you guys so you can understand it. So ideally what you're waiting for, this is a bullish example, right? So you're going to see a move down, it's going to have a wick, and then you're going to have the close of this bearish candle down here, and then you might have an opening price of a bullish candle. It doesn't really matter, whichever one it sweeps is fine, but ideally in this scenario, instead of waiting for an actual liquidity sweep of the wick, it's going to sweep the opening price or closing price of these bodies here, which then will reject price all the way back up. If you can pair this with an SMT there or an SMT there, meaning ES failed to run that opening price or closing price like that, and NQ did, that is what's called an SMT rejection block, which is very high confluence. And it's even more high confluence if we have a rejection block SMT and also another SMT with that wick as well. So the same concept is flipped for a bearish example, and then of course price trades up off of that towards the drawn liquidity, which is up here. And this is the other example that I showed you guys here. But yeah, that's pretty much that. So how do you use rejection blocks in trading exactly, right? So you can use it in multiple ways. You can either just enter straight off of the rejection block and not necessarily hope price reverses, but use all your confluences in line with the rejection block or the SMT to forward to basically back your bias in whatever direction drawn liquidity you want price to head towards. Another thing you can do is wait for that confirmation, wait for that rejection of that rejection block, and then you could wait for an IFEG or a change in state of delivery, or you could wait for a fair value gap to form, enter on the fair value gap, tap, and then take that up to the drawn liquidity, or vice versa if you're bearish. It really just depends on your type of trading style and how you want to go about doing it. So for stops and targets, place stop losses just beyond the wick that form the rejection block, and then target opposing liquidity levels or market structural points. Just like I showed you here, if you decided to go long off of this rejection block, you would put your stop at that swing low, anticipating that it won't get taken out. You can even put it a little bit more below just in case it decides to do that, and then of course you target the opposing end of the range. And again, like I said before, if you could pair this with other confluences, it's even more of a high probability of that trade working out. You can combine them with fair value gaps, order blocks, or even fib retracements like equilibrium or OTE. So if we look at this example over here, this is actually an example of when we did create a rejection block and had an SMT, but also made an SMT with a swing high. So if you look right here, you'll notice we have this wick here at 1108, and that comes up here. And if you look at ES at the same exact candle, you'll notice we actually came up above these swing highs here, but also this opening price here at 930 was swept on ES. So we have the double SMT with that rejection block. So very high confidence that that works out. that is a great example of a bearish scenario, as well as having this bearish fair value gap holding price up on NQ as well. If you look here as well, you can see this wick here from 938 on Wednesday's price action. And if we go ahead and move this over to the opening price at 832, you'll notice that we did sweep out that opening price, as well as tapping into this little volume imbalance here as well. If you look over at ES, you'll see that we actually never came below that opening price, creating an SMT rejection block, which indeed did shoot price up because we had this fair value gap here as another confluence holding price up, and also the fact that we did sweep out this low here, creating another SMT with this SMT rejection block as well. So please don't overcomplicate this for yourself. If there's price action like this and you try to like make out, you know, in this opening price getting swept by that, trying to find SMT rejection blocks in here, it's gonna mess with you a little bit. So just make sure you only look for these types of patterns or these types of moves when it's very efficient action during some sort of macro, during New York Open, during a specific time where there's a lot of volume and not necessarily choppy action like this. So that's really all I got for you guys today. If you guys enjoyed, make sure to leave a like on the video and subscribe to the YouTube channel if you haven't already. Leave a comment down below, whatever you guys want to see. I'm always on there looking at the comments, answering you guys, so make sure to do that. And lastly, before we end the video here, just a little tip. If price does invalidate a rejection block, meaning it breaks through it, this level can act as a breaker block and also become a new support for price, and also become a new support or resistance zone. And I'll show you exactly what I mean by that. So if price indeed decided to break above this area here, let's say if price indeed decided to break above this high with displacement, we could expect that we could hold this as a breaker to then shoot price all the way back up to whatever the drawn liquidity is. So that's really all I got for you guys. Again, like the video, do all that good stuff, and I will catch you guys tomorrow for day 20. Peace.